following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. We are, of course, your bi-weekly choice for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as from this here Options Insider Radio Network. I'm sure there are a few of you lurking out there who tune in on a regular basis, but maybe haven't visited the website. If you haven't, you don't know what you're missing. Surf on over to theoptionsinsider.com. You can, of course, leave comments and questions for the show there. You can read all of the unusual activity alerts that we get into on the show, but in much more detail, as well as all the education, analysis, breaking news from the options market, all that good stuff. It's a veritable clearinghouse of information for the options trader. Speaking of clearinghouses of information, we are joined today on the program by the usual cast of characters, starting off with that font of knowledge himself, a.k.a. the Viceroy, one Alex Jacobson from Options Express. Mr. Jacobson, welcome back to the program, sir.
Hey, Mark. It's good to be here on this incredibly cold day.
Yes, it is quite chilly. A good day to be beaming in from Casa Jacobson.
Yeah, I'm here with the dog, the hot chocolate, the Viceroy hat, and the bunny slippers.
So listeners, if you're wondering why Alex sounds so good today, it's because he's not beaming in from behind the OX firewall, and the Skype gods are smiling upon him for it. All right, also joining us, beaming in from the hinterlands of Maine, where he is busy blogging in his hot skates, none other than Mr. Andrew Giovinazzi, a.k.a. the Rock Lobster from OptionPit.com. Mr. G, welcome back to the program, sir.
Always glad to be here. Skated yesterday. Today, though, I have too much work to do. I can't skate. I'm very upset.
No time for hot skates today? That must be a busy day.
No time for hot skates. We have great ice. All the ponds are frozen. All the little Maine skaters that are running out there. Well, you either people that are out there skating, or you have kind of people sitting on the couch. Those are kind of what you got right now.
All right. And with the team mostly assembled, Uncle Mike should be joining us any minute. It is time to keep on rolling right on into the Trading Block.
The Trading Block.
All right, and welcome to the Trading Block. For those of you playing the home game, we are recording this on January 23rd, so bear that in mind as you're listening to all of this data. Of course, for all of you tuning in many months and even years down the road, don't worry. Still a lot of great stuff in the show for you, too. We make sure we sprinkle every show liberally with some very evergreen content. So kicking things off today, we saw a little bit of a red, a little bit of sell-off today in the old markets, just a wee bit. Most of the major indices closing down almost 1%, S&P down about 0.9 of a percentage point to 1828. NASDAQ, probably the laggard on the day, down a little over 0.5% to 4218, and the Dow leading the charge to the downside, down 1.1%. Or nearly 180 handles to 16,197. Of course, defying our narrative for Q1. The VIX cash has gotten a little bit of life to it today, ticking back to the upside. It was up higher throughout the day. It closed off its highs. I believe it got up into the mid to high 14 level at some point intraday, closing today at 13.77. So maybe we'll start there. Andrew, is this it? Is this the beginning of the event that will finally bring some vol, bring some life back into the market? Or is there's just a little bit of a wee bit of a pop, and then we're headed back into the doldrums and the long, slow progression back down to the 11 or maybe even the 10 handle in VIX cash?
That was funny. A wee bit of a pop. Actually, I got a note from a client today, saying, oh, there's huge resistance or there's 1450 is the big number for VIX. If it breaks through there, he takes this stuff with a grain of salt. But that was the number, 1450. We're taking off to the races if we trade above 14.
Well, it hit 1466 today, so we should be off to the races by his logic.
Yet it did not take off to the races. Although he actually doesn't really trade that way. He mostly just is kind of aware of it because a bunch of other people are looking at stuff like that. So. It went right up to that number, traded over it, looked over the edge, and like Kilroy, stuck its head back below, and now VIX is trading 1377. The thing is really why we had, which is I would say, it was a fair move for the down move we had. We were actually down like 1.25% at one point during the day. So vol is doing what it should. The volatility futures actually went backward again, the short term. So the vol futures not hugely buying the rally. Buying the rally in the cash volatility very much. I would have been a little, actually would have been better for us if actually things really melted hard. We own a little more, we own a little Vega, but the idea of, we had a measured sell-off based on an Argentina devaluation, some bad factory order news out of China. Earnings are kind of, so-so. And, I think that's enough to get the algos whacking away at the, at the big indexes. So, and also too, if you look at the stocks, kind of a mixed bag on the stocks. Stock like Twitter was up, Apple was up. Zynga was down only 6 cents, that bellwether. Microsoft coming into earnings was up 13 cents. There was a little churn. I think the financials got hit kind of hard. But really the story, I think, was treasuries. They were up, the TLT was up $1.47. So there was a pretty big rally in bonds. I think the flight to quality, Euro, I guess, is now the flight to quality second product because the Euro rallied pretty hard today. Is this the start of an emerging market meltdown? Because I think Argentina just has a lot of bad economic policy that, the president there has been trying to nationalize all these companies, and maybe people are like, I think I'm out of here. So, that causes a reassessment maybe of some portfolios. But I think a reasonable move for the VIX. It was underwhelming all morning. It picked up a little bit of steam during the day, and and we got what we got. So let's see tomorrow, and let's see how these bonds hold up going into the FOMC meeting. I didn't think the economic data was too bad, at least domestically. So we'll see how that all plays out. If these treasuries can hold on to this rally. Pretty good dead cat bounce for the last 3 or 4 days, for sure.
Yeah, it seemed like it was only the weak existing home sales that really kind of weighed domestically anyway. Of course, China's weighing on everything, but domestically, it seems like it was the weak existing home sales that kind of set the market into a bit of a tailspin earlier in the session. Of course, you mentioned Softy. They are indeed reporting right now as we speak. They went out almost 36 even. And that 36 straddle going out at about $1.50 or so. And right now in the after hours, closing around 36 even, they're trading 37.5. So pretty much right in line with expectations, with sentiment right now. So Softy perhaps turning into a bit of a, at the very least, straddle performer, if perhaps not outperformer. Who thought we'd be saying that 6 months ago? Wow.
Microsoft is a growth stock again.
Yeah, there we go.
Trading at a 12 PE. But hey, Who knew?
It's crazy. And they still don't have a CEO, so who knows where the hell this thing is going.
What's funny is it's actually that straddle pre-earnings has been a buy. I closed it yesterday, actually, but the straddle has paid every time for the last 5 cycles.
Yeah, that's the narrative. I was just going to ask you that. I was like, this screams Andrew free juice going into earnings.
Totally.
I'm sure you had that on.
They actually paid you to own the juice, and after they paid us so much, we closed it. But
gotta love that. There are much worse things than that. Like perhaps what we're going to talk about in the mail block later, that monstrosity of a trade. But we'll leave that tease for later. Speaking of monstrosities, we are also joined by the monstrosity himself. Now better late than never, aka Uncle Mike Tusaw, beaming in from the hinterlands known as scenic and lovely St. Charles, Illinois. Uncle Mike, welcome back to the program, sir.
Oh, happy to be here as per usual. And yeah, that Microsoft, it's an emerging company. This Windows thing is going to be big someday, I'm telling you.
Yeah, they're going places that soft. I think keep an eye on them.
I think so.
Little engine that could. I know we talk about Apple a lot with you, but I'd imagine you have more than a few clients who are into maybe more of the broad tech names like a Microsoft. Is this a holding for any of your clients? No,
Microsoft. The main thing that. I can talk a little bit more about what's been catching our eye, but for the most part, in the overall indices. One thing the thing that I noticed a lot today, or one of the key points that I want to bring up today, is that looking at SPY or the SPX, we closed well off the lows today. So I don't know. This might be another washout like it was a few days ago, and we'll see.
Yeah, I was prepared. Thank God I didn't have to write the notes earlier in today, but I was prepared to do it and then have to erase it all because we erased pretty much all of the down move. It didn't really happen. It bounced a bit. You're right. It didn't erase the sell-off, but it did bounce a little bit, so I suppose that is a bit of an encouraging sign. Mr. Viceroy, I know you love a good softy tail or two. Was that light up the tape over there at OX today? A lot of clients coming in and maybe buying straddles for a change or blasting them out. What was the tail over there at OX today?
The tail was mixed. It was a little of everything in Microsoft. There were people actually taking positions off. There were some collars that were getting adjusted during the day today, but I queried both desks today. I queried the futures desk and Grigas, the equity desk, and they really didn't have time to talk today. Just everything was busy today. It was just one of those days. I was on the desk yesterday, ironically, and Claire, one of the customer service people, told me she had handled 100 calls yesterday, which was a record. And that's just what's been going on lately. It's just everything is trading. It's the bonds, it's the equities, it's the energy complex, which has been crazy lately. But it's just been everything. It's just, busy on every level.
Music to a broker's ears, busy on every level. I think some of the conferences I've been going to lately seems to be reinforcing that. People seem to be happy at all the industry gatherings for a bit of a change. But, it's interesting. We mentioned Microsoft. It looks like they're faring well in the after hours here. Coming off a little bit now, but we'll see how that trend continues. But earlier in the session, or actually yesterday's session going into the earnings, Netflix, we talked about them on the show before, once or twice, and they were tearing it up again. I think they closed today up about over 16.5%, or about 55 handles to 388. Once again, proving why you just don't sell premium in Netflix, at least on the ATM straddle side, that's for sure, because that went out. The 335 straddle went out about $33. It traded well over $20 beyond that today, closing over $20 beyond that. So once again, premium sellers getting run over in Netflix. This is kind of a par for the course for them now. So if you haven't learned that lesson by now, particularly when they got cut by almost 2/3 about a year plus ago, then you're never going to learn your lesson. Do you still have any clients out there aggressively looking to sell Netflix premium, Andrew, or do they really kind of stay away from it now?
We actually, that's not the top of our listing to sell juice in, I have to admit. I don't think, every once in a while, like a protected butterfly, something like that, when it's kind of sitting around not doing very much. But into earnings, I would say no.
Yeah, this is one of those nasty ones. And they bait the hook really well. They bait the hook with some juicy vol. They say, come on in, come sell this vol. But it's a giant Venus flytrap, and it just snaps shut on you the instant you do. And this thing just, up 16% today alone. They have something like 40 million subscribers now. They're just printing money over there at Netflix. So Apparently, if you were one of the crazies out there selling premium, I'd imagine most of our listeners tend to focus their dark side activities on the put wing unhedged, so I'm guessing they might have fared well after all. But you never know with these things.
Mark, just note to self, when Carl Icahn buys, you buy.
Ah, yes.
Don't even think too much. Just buy.
It's like the Buffett newsletter, same thing. Whatever he's doing, I'm in it. I'm on it. I want to do it.
And, it's like buying eBay with that huge PayPal piece. It's like, okay, he's only at 53 cents today. He's got their shot. Write the 50 puts. You're going to be okay. You're going to not really lose. He tries to help you out. So
he's a humanitarian. It's all for a good cause.
9 times his dough on the Netflix, buying it like the 60s or 70s.
Yeah, he's done all right.
Not too bad.
Humanitarian, all for a good cause. Speaking of humanitarians, Uncle Mike, what, aside from Netflix and Microsoft and all the other craziness going on in the market today, what caught your eye the most in today's activity?
Oh, that shiny stuff, gold. I think that with gold coming off of the support, like the double bottom that's formed from a few months back and then to right now, gold's definitely making a case for the bulls this coming year. So gold definitely caught my eye. It's up a little over 2%. Bonds are still catching my eye for sure, with it coming up the way it has. And even with this big downturn, Apple is showing some strength. So now that earnings are coming up in a minute or two, this should be interesting.
Yeah, earnings should be reported in about 8 minutes, so stay tuned, listeners. We'll break down that one as well. A little early earnings action here on Apple. Hopefully you didn't perhaps buy some weeklies this week, because that didn't work out very well for you. I also should just really touch on it really quick. I don't want to go too deep into the weeds on this, but I have been spending some time this week at the big Securities Traders Association of Chicago Expo they have every year. They break down a lot of fun market stuff going on over there. I was pretty excited to see they actually had a startup panel today, which never happens. I've been beaten on some of the industry groups for years to do something like that. That's why I finally had to go start my own startup group in the option space just for that reason. But now they had a panel on that this morning at Stack, so that was kind of good. I want to tip my hat to the folks over there at Stack for doing something like that, because quite frankly, I just can't sit through any more sit through any more penny pilot debates and how many exchanges are too many exchanges and all that kind of stuff. It kind of gets a little old, so nice to see something new. Focusing on good stuff. Speaking of how many exchanges are two exchanges, there was another session on fragmentation. A lot of reps from the exchanges and another guy there who actually has been a guest on the show in the past from a BD that shall not be named here on this program. And a lot of them were kind of spreading the word that, everyone talks about fragmentation, but it's not really that bad, and that the notional size displayed on the MBBO, notional value, is actually bigger than it was back in the day, and that's really just competition in other words, so it's a good thing, and that retail doesn't really care about fragmentation. I kind of wanted to, put them in touch with this show and have them listen to talk to a few of our listeners out there, because these guys, even doing, simple 10-lot spreads, are starting to feel the impact of this stuff. And it always kind of drives me crazy when you have these industry panels that say, "Oh, things aren't that bad. Things are actually really great." When people actually out there doing it are kind of saying a different story. Granted, one of these guys, they were talking a lot, including our former guest, talking a lot about equity fragmentation as well. But they kept going back in general that retail doesn't care about fragmentation. And I think in the option space, that is anything but the case. But now, speaking of things that are the case, it is time to close the case on the old trading block, at least for a little while, and time to open that book on the weirdest part of the show, a.k.a. the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, you know what that funky tune means by now. It is time for the odd block, where we break down the intriguing, the interesting, the bizarre, sometimes it is downright weird stuff we see lighting up the old options tape today. Going to kick things off with Flagstar Bancorp Inc., ticker symbol FBC, excuse me. Not a biotech, so there we go. That's a little bit of a break for us. And closing today, $20.78, up about 50 cents, or about 2.5% on the day. This is the name that does a whopping 400 contracts a day, doing nearly 9,000 today. A ton of those coming on looks like two big plays on two sizable strikes. We wrote up the March 25s on our site this morning. We went up about 1,000 times for about 30 cents. Those were opening buys for the most part because they're all opening because there's no open interest to speak of whatsoever. 2,600 total on the day going up. And we also saw 4,500 of the Feb 22 halves going up as well. So some size bullish paper, it looks like, going up, particularly if those Febs were buys. Is that your take as well, Senior Andrew, with those Febs buys as well?
Yeah, I think they were. It was just I didn't see any open interest to speak of in this stuff. 68 contracts.
That's size, baby.
That is huge. And what I'm looking at is look at the number, though. Okay, this is a bank, right?
Yeah, not known for blowing the doors off things,
And you're buying 20% out of the money calls. Hey, I hope they're right. But that stock's got to get some giddy up in it if they're going to make any money on any of this stuff. So, and it actually looked like they're already down on the day, on the close. So, yeah, I'm sitting there looking at, it's kind of a head shaker. Somebody's excited. They got their new I don't know, I guess their new button to buy a bunch of calls with, and they're buying some really expensive. I'm not going to say they're expensive. You need a pretty good size move in a $20 stock to cover that. And the Feb 22.5s, 4,500 of those traded opening. I mean, that's a pretty good move. And I believe earnings were already released in this thing. Jan 22nd. Okay. So, yesterday. So either they're coming out this morning, but whoever is buying these options is looking for a power move, and they're going to need it.
Maybe they pulled a Tucson and thought the earnings were today, and so they loaded up on all these calls.
Crap!
But it does have earnings coming out. There are some, they're call buyers, so we'll see actually how they price. But the Feb 22s actually overtook the volume here by the end of the day.
Yeah, they were paying upwards of 60 cents for those Feb 22s. I mean, why wouldn't you do the Feb 2022 half for, 80 cents to $1, a little over $1, and at least you got something with some meat? I mean, that's crazy. Crazy talk, I say.
They're just buying calls. So good luck.
I like your description. Someone's excited.
Somebody is, and I mean, there has been some movement in the banks for sure. And they definitely have sold off a little bit here, the last couple of days. But, you need, with the volatility where it is, you need a 10% move in the underlying on earnings to really make those pay. So
again, we shall file this one in the to be watched category and come back to it not too long, in about 30 days, to see how this guy's faring, at least on the Feb part of that trade. I'm guessing, call me crazy, I'm guessing he's going to be rolling. I mean, think I'm crazy? I don't know.
He's going to sell them for a nickel.
Yeah, a nickel if he's lucky. Penny. Right. All right, next up, we're rolling on to name we don't talk about that much. Royal Bank of Scotland. They do some fun commercials floating around. This is, of course, ticker symbol RBS. About unched on the day, a name that does a whopping 600 contracts a day, doing 14,000 contracts today. So some big numbers going up in RBS, including a boatload, 11,000 or so almost, on these Feb 10 puts for actually 12,000 total on the day. So walk us through this put buying bonanza here in RBS, Senior Andrew.
Well, again, look like closing. I mean, the market on these puts, they're still offered at a dime, so I'm assuming they're still trading a dime. I think somebody's trying to get out of them. And possibly it was the open interest was short. Now, the only reason why I say that is because now they're starting to look like to sell the May 10 puts. The May 10 puts traded for less than 2,000 contracts, but the open interest is starting to build there. So it looks like somebody's there was a short put and they're trying to roll the position. The problem is if it's a roll, I mean, you're getting a quarter for the Mays, you got to pay 10 to get out for the Febs. You're not getting a lot of money for all the effort here that's going on, unless you really want to buy the stock at 10. But it's kind of, again, this is a head scratcher as far as what are they actually getting out of all this. from a dollars and cents point of view. I mean, it just feels like a lot of work for not a lot of money.
Again, a guy who likes his broker.
I think this is the broker likes him, one of the two. So, I mean, the stock really hasn't, maybe they sold the 10 puts. They got a good price for them. And they're just closing them. But, the stock touched 10. It touched 10 in mid-November, traded over 12 not very long ago. So, I think the guy's just, feels like he's closing them because if he bought them and he's selling them at a dime, he didn't make any money on them. So to me, it's just somebody that had sold them at one point. The stock made its move up and they're still holding on to them. And now they're like, okay, I better close these things. So, but there's pretty much all you can buy at a dime right now. So I feel like it's somebody's trying to buy to close essentially. And that's the reason.
That seems to be the case. And you're right, we shouldn't make fun. Maybe they sold it for quite a bit of money. We haven't dug into all the open interest to see what they put them on for. But, man, maybe they're just taking off profits and they don't care. So we'll be charitable. And we'll roll on into our next one here. Good old YPF. I know I can't start my day without looking up YPF SA, a.k.a. this is all right, here we go. So, yes, good old YPF. This is the Argentina-based integrated oil and gas company. Everyone's favorite name, closing $24.11, down about 4.25% or 15%, taking it on the chin today. Things not exactly looking too good here. As you might imagine, volume through the roof, doing about usually 3,000 contracts a day, doing 17,000 today. A boatload of that on the put side, as you might imagine, on a day when things are selling off quite heavily. People like to scramble to buy some puts, go figure. Tons of action, Feb 25 puts, Feb 20 puts, Feb 17 half puts. Someone's really bearish. Unless no open interest to speak of in either of those. So all of that is opening. But what we'll start off with actually is what we profiled on the site, which are a little bit farther out. Someone looking to the upside, maybe thinking things have been a bit overdone. Or perhaps there's some open interest maybe closing as well. We're talking about the 825s. So, yeah, we saw a trader coming in, lifting offers on a size market. You can drive a truck through that, 55 cents wide. So this guy clearly wanted to get done. Senior Andrew, walk us through the madness that was YPF today.
Yeah, well, YPF, he got done at 350 and they're offered at 285 now. So this looks like straight up. It looked like, again, I think it was opening paper because the volatility jumped so high. They're probably in the same place they were if he had sold them prior to the Argentina devaluation. Hard to tell if this. The thing is that it's hard for me to believe this is a closing order because that means, they basically were selling. They were shorted in the money call going into this. So it feels like more somebody trying to just sort of scoop the bottom by paying $350 for these. Probably paying the peak in volatility for them. This is normally like a 30 volatility stock, and it's trading 75 right now. I was actually just looking at a trade, like maybe buying the March quarters and selling the April 30s on a ratio, something like that, to whack out some Vega. But again, I just think it's a guy trying to buy calls to scoop the bottom, and this whole peso devaluation thing is overbaked, but maybe not. So we'll see how treasuries react to all that.
And this is what happens when you race in on the open when things are going crazy and you try to put some trades on in that crazy environment. You're going to pay some inflated levels of volatility, regardless of which direction you're putting it on for. Looks like this guy suffered that fate today. Of course, he probably also bought it right before the sell-off had finished, so he probably took some delta hits as well. Either way, taking a little bit of a hit on those calls. Today, we'll see if in the long term he is positioned well. But now we shall move out of the realm of YPF and towards everyone's favorite free antivirus maker. This is, of course, AVG, closing today $16.87, down about 14 cents on the day. Another one that does about 3,000 contracts a day, so that's not bad for a little online security manufacturer for the most part. Doing about the same amount today, but it wasn't the numbers that caught our eye. It was more of the what they were up to. We saw essentially two blocks going up today on these Feb 17 halves. They went up a total of 1,500 contracts going up on the day, so that accounted for about 50% of today's AVG, and only 560 contracts open on the strike, so It's like some opening paper, some opening love here in AVG. Is that your take as well, Senior Lobster?
Yes, Senior Lobster says, again, more kind of buying out of the money calls, looking for good earnings. Maybe trying to buy your options for free. They've got earnings at the end of the Feb cycle. They're paying 65 cents for these now. Maybe they'll get a little lift here without a lot of decay. So not too bad of a trade, I don't think. This stock has the potential to move. It hasn't done it lately, though. Trading at about a 20 vol. So, but again, not a bad call buy. It was trading 25 prior to the last cycle. So somebody's definitely looking for a relight of the love of this earnings behemoth that is AVG Technologies.
Yeah, you don't usually think of internet security as being a big mover and shaker, but this one has some vol to it. You're right, it was trading about 26 going into the last earnings cycle. This guy clearly on that train again, or perhaps he's on the Andrew free juice train before earnings. Either way, an interesting one. Perhaps we'll keep an eye on this one as well. Very cheap
stock too.
Yeah, 16.
And it's like 10 times earnings. I mean, the company makes a lot of money.
So. You diehard fundamentalist, you. Not bad money they make on free software for the most part.
Yeah.
The old freemium model strikes again. All right. And that is going to do it for the old odd block. If you'd like to read more about any of those and a lot more we didn't have a chance to get to, surf on over to theoptionsinsider.com, click on the unusual activity tab, and you'll have it all there at your fingertips. But now it's time to keep on rolling right on into the fancy hat block, a.k.a. the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, welcome to the Express Block. This is the portion of the show where the Viceroy takes the reins and gives us his behind-the-scenes tour. Today, it's a remote tour, beaming in to the HQ of OX. Mr. Alex, aside from drinking your hot cocoa and enjoying the warmth of Casa Jacobson today, what else caught your eye in the activity going on over there at OX?
So before I get into activity, I'm going to do a couple of Tusaw-esque rants first. And the first is it's tax reporting season. And I was sitting on the desk yesterday and a question came in and we all got it wrong. So one thing I want to point out in tax reporting season, if you are trading ETFs, ETNs, or leveraged ETFs or ETNs, please be aware of the fact that they do not have uniform tax treatment. And I learned a lesson yesterday doing my homework, which I should have done before I answered the question. Some of these are 1256. Some of these will be conventionally treated under your 1099. And some of them, and I wasn't clearly able to identify all of them, are going to deliver a K1, which I did not know.
Oh,
go ahead, Mark.
I said, ugh, a K1. That's the last thing you want.
A K1, and I didn't know that. And actually, a customer had called in and asked one of the trading desk people, and then we kind of did a little research. The challenge with getting a K1 is you won't get them till March. So if you've traded some of these throughout the year, please be cautious about filing early just because you got your 1099. And you may want to go to the sponsor site of what you're trading. I think the one we were looking at yesterday was one of the inverted or the inverse VIXs, and it's structured as an MLP and will give a K1, which makes no sense because then we searched a whole bunch of others that weren't, and then we find a couple more that were, and obviously I didn't search the whole ETF, ETN community, but number one, please be aware of that. Rant number two, understand how margin works. And we've talked about this before on the show. And if you've got an account that's traded to minimum margin, or you've got an account that's traded, especially if you've got a portfolio margin or a risk-based margin account, and you used every last penny in it, you're going to be killed. Something's going to go wrong and you're going to be killed. You can be well diversified. You can be hedged. Please understand how margin works. And one thing I want to hammer on, margin will not protect you, the customer. Margin is intended to protect me, the broker, from having you leave with an unsecured debit. So don't rely on margin as a risk management tool. And when your broker says to you, you're going to have to change your margin requirements because all of a sudden you've got a concentration of this stock, or we've had a change in margin. One of our competitors that runs a very, very quality risk book took a $200 million hit in the last quarter on both currency translations and unsecured debits. And the customers involved in those things, I know are not happy. Maybe they're not going to end up eating all of it. But I know the customers aren't happy because the customers are done. And you don't want to put yourself in a position where one event finishes your trading career, or as I once heard a market maker say, I have to now go find a new group of friends. But now that I'm done with the rants, what was busy today? We've talked about it. Netflix, Apple, Herbalife today. Apparently, Markey wants the FTC to look at Herbalife. F5 Networks, I know it was on one of our unusual activities a few days ago. F5, big pop today. Baidu got hammered today with the Chinese news. So anyway, it was a busy day. It was a busy day all around. I know it wasn't a good day for some people. I know back in the days when I worked at the SIBO and market makers would come off the floor on a day like today, some of them would be shaking their heads and some of them would be saying I had a good year today. Be looking real hard at the follow through next week. And we'll talk about that in a little bit because there's a lot of blue chip earnings next week. So very interesting day, not a pleasant day for a lot of people, but a very interesting day. And, Andrew talked about this, the Argentinian devaluation. I think this is their fourth default. And I think this could be a catalyst to really hammering emerging markets. An Argentinian default is I'm trying to think of the analogy, but I think this would be the third or fourth one in a couple decades. But clearly the market was spooked by both China and Argentina today.
Thank you, Alex. That was some good points while you were chatting there. I was looking up some ETFs and K1s because you're right. You don't want to have a K1 sneak up on you like that. Probably do your homework. Obviously, search for your ticker symbol in K1. Probably the best low-hanging fruit way to start and see if your ETF has one. There are some sites like ETF Database and others that do claim to have a complete list of ETFs that offer a K1. This most recent one I found was from 2012, though, so beware, it could have changed since then. A lot of the conventional wisdom seems to say that a lot of the commodity-based ETFs are the ones that typically issue the K1s because they're constructed like partnerships. But again, delve into your prospectus and search your ticker symbol in K1. See if you're going to have that nice little surprise waiting for you in your mailbox in a couple of months. All right, and now it's time to keep on rolling right on into my favorite part of the show. No offense, Alex, because it's time for the mail block.
Now it's time to empty the mailbag and see what our listeners have to say. It's the mail block.
All right, and welcome to the mail block. Again, this is the part of the show that I like because you guys get your chance to sound off and join us here on the old program. And we got time for one question today. It's an interesting one. It's a bit of a doozy. I'll do my best to get us through it here. We had a question here from Mr. John King coming in on Twitter, and it's an interesting one. We got people writing in a lot with questions like this of, hey, what do you think about X? What do you think about Y? What do you think about this strategy? What do you think about this setup? That sort of thing. And he's doing something similar here. He has any comments on this style of options trading? Is it smart, cowboy, or in between? And what he's referring to, he sent me a link, and we went through it a little bit. I had a chance to look at it a little bit before the show, not too much. But it links back to one of these trading services. There are a bunch of them out there, trading rooms, and they're walking you through some earnings trades. In particular, this one was talking about Cree, and he was lighting up some trades ahead of the earnings announcement. In particular, let me see if I could I can summarize it for you. This guy, their stock was trading around $63 pre-earnings. This guy came in and he put on a bunch of positions. He bought the 69.71 call fly, these are all weeklies now, bear in mind, listener, so they're expiring right after earnings. The weekly 55.57 put fly, and then he sold the big part of the trade. Really sold the at the money 63 straddle, so right at the at the money thing for about $7. So he had a little bit of wiggle room there. And then he bought a couple of flies around it. Like I said, 69.71 call fly, bought the 55.57 put fly, sold the weekly 74.80 call spread, and then he sold a bunch of other stuff. Sold the 52.47 put spread, sold the weekly 49 put, sold and the straddle, like I said, and everything else. And he kind of referred to this as picking up $20 bills as you're walking down the street. So getting back to John's question, what do I think about this style of trading? And I can see kind of what this guy is up to. And these guys who have these trading rooms, they kind of fall into this kind of almost by default, because people are paying to watch you trade, so you kind of have to trade. So, he probably set up this initial thing, and I could see probably the initial thought process that went into it. He sold that straddle for about $7. He put those long flies on to either side for about $10 to the outside in case the worst comes to pass. He's got those flies on to kind of catch them and protect them in case that happens. Then he kind of goes a little bit nuts, and that's kind of where I kind of lose the thread of the trade a little bit, and I'm guessing he probably did too as well. And this is, in general, the kind of trading I like to avoid. I like to much rather come in and have kind of a more clear set and defined strategy. I like selling the straddle. I like buying the flies against it to cover yourself. Now you have a nice predetermined strategy, and you as the trader, going into this, what you have on. And once you start blasting out all this other junk, this put spread here, this call spread here, I know why that happens. You kind of get tempted. You're sitting there watching this trade. Maybe you don't like sitting on your hands for a week while the earnings are coming around. Maybe you're saying, hey, there's some nickels we picked up here or there. I like this little spread here. I like to blast out these little puts here. And before you know it, you got this hodgepodge of nonsense, most of it short on this thing. And if you listen, I listened to a little bit of the link you sent, and a lot of the management comes in after the earnings, and he's scrambling to buy stuff back and do all these other things. And that's kind of what happens when you put on this kind of haphazard melange of positions here. So in general, if I had to using your grading methodology here, I probably would leaning towards the Cowboy side of the fence, because all that extra crap is just crap that's waiting to blow you out because you forgot about it, or you don't have a handle on how many net units you're short to that particular direction when the worst comes against you. If you want to do this, stick to the first part and stick to the kind of predefined strategy that you have, and you put it on. Once you start putting on all these crazy extra bits to squeeze every last bit of juice out of it, that's where you really start getting into trouble. And you have to be on your keyboard the second the earnings are announced and everything else, trying to hedge and maybe gamma scalp, or after the open trying to buy some of these back in that frenzy of vol that's going on at the open. It's a lot of crazy nonsense. So, I mean, I don't know your particular trading style, but if you're watching something like this, I think, maybe you're probably better off just having a couple preset trades going into this and then going from there. I won't speak for you guys, but I'm guessing you guys are probably in the same camp. Mr. Tucson, maybe we'll start with you. I know you haven't had a chance to probably review this whole trade, but what's your take on this style of trading here in general?
I'm going to tell an old story that I'm sure I've told on this show at times before. When I was first getting into trading many, many years ago, I was selling naked strangles on the 10-year note. And even though very seldom do I ever go naked in my career today, I was doing them in such a way to where I had set parameters for risk management, and I was doing them in, I guess, as responsible as you can be if you're going to go naked on something. And so with it, the strategy didn't work out. I lost a couple $1,000 and decided to move on with my trading and do something else. But with it, there was one time I was going into some big report. I forget what it was. Maybe it was the unemployment number, retail sales. I forget, maybe whatever it was something that was definitely going to be a market mover. So you know what? What if the 10-year note goes up? I better buy some calls. So I'm sitting there, and it's almost just like you described. Well, what if it goes down? I'm naked this put. Well, I'll buy some puts. Oh, crap, I got some time decay going now. Now I'm short some. Now if nothing happens, I got this theta working against me. So I sold some more premium. Well, now I got this Vega. I better do this. So after probably about 20 minutes of protecting myself each way from Sunday, I look at the trade, this 11-leg trade or whatever it was I come up with, and I'm like, you know what? I feel real good about this trade. If this happens, I'm okay. If that happens, I'm okay. I'm in good shape. And then I looked at my position Greeks across the board, 0, 0, 0, 0, 0. I basically traded myself into a pointless position and made my broker very happy, to say the least. So one thing that I would say, there is a such thing as overtrading. And that's probably the one time that I really realized that you're not going to protect yourself against everything. So the first thing is don't overdo it. And the second thing is that don't get tempted about things when you're actually in a trade. Emotions play a big role in this. And if you're going to go naked, then go naked. Have your stop loss in, have your risk management in, and do what you got to do. But don't do what I did 10 years ago when I was looking to try and protect myself 8 ways from Sunday, because as the old saying goes, let's not get too smart, folks. You got to have some skin in the game somewhere. The second point that I'd like to make is that I don't know if I'm necessarily a fan of protecting a short straddle with a butterfly, because if the underlying continues to go out further and further and further. Now, granted, you could say, well, it's a very slim risk. You're only protecting tail risk. Butterfly is going to be 100% useless. So I just want to make sure I'm understanding correctly. They sell an at-the-money straddle, and then they are buying an out-of-the-money long butterfly to protect, in the hopes that even if it goes out a little bit too far, the butterfly is going to work some of that protection. Not a fan of that, just because of the fact that, if I'd like to once again reiterate, if you're going to buy protection, then buy protection. If you're looking at that, what he was probably doing is something like what I was doing and thinking, oh, all I have is a butterfly to protect me. Well, I better buy this to protect that. Oh, wait, well then what about this? I better buy this to protect that. And like you said, Mark, you're going to get so much stuff going on that even if you have the best possible software to monitor all that, that's still very difficult to monitor a 35-leg position. So don't get too smart, folks.
Mr. Alex, Mr. Andrew, anything to add to that?
Tusa's spot on. He's just spot on. And the thing is, you can't trade cheaply enough. And I don't just mean brokerage fees. I mean bid-offer spreads to hope to really make any money out of positions like that. But Mike's spot on. It's just too complicated.
Yeah, I try to limit the adjust. Like, you have a trade, every once in a while you might have to adjust or close something, but that's just a mess waiting to happen. The problem is what I try to tell traders is, you have to make sure you're fairly certain of what your intention is for the trade. And all that looks like there's no real intention except for, I don't know what I'm doing kind of thing. I don't see, if you want to sell premium, sell premium. If you want to buy it, you want to buy it. If you want to do it contract neutral, do it contract neutral. But there's no, unless you can see what the exit looks like, you probably should not be entering the trade. You should have a very clear picture of exit before entry.
Yeah,
that will take care of most of your problems.
Exactly. It's a guy who's got to market a trading room. He's got to trade, so he can't really sit on his hands. He's probably caught in a catch-22. And you're right, Mike. I was trying to be charitable with him about the flies. I would not use flies. They're not my go-to method of hedging a short straddle. I would much rather go, I have calls on the wings or maybe a call vertical, something like that, but not just a fly is not my choice. But I was trying to ascribe the best of intentions to him, given this hodgepodge of a mess that he put on. But interesting questions. If you guys have your questions, you know what to do. Send them in to questions@theoptionsinsider.com. Find us on Twitter, twitter.com/options. Find us on Facebook, facebook.com/theoptionsinsider. Of course, leave us a comment on the old show notes. A lot of great ways to get in touch with us here on the show. But now it's time to keep on rolling right on into our final segment, Around the Block.
Around the Block.
All right, as Alex alluded to, we got a lot coming up on the block. We actually got some announcements on the old docket, starting off with we have Ford on the 28th before the earnings. Remember, Ford's always before, so if you're planning on putting all your trades on the 28th itself, you're going to miss it. Facebook, the 29th after the close. We got Yahoo also on the 28th We've got Goog on the 30th, all after pretty much Chipotle on the 30th, Amazon on the 30th, and then, of course, some little fruit company coming up soon here on the 27th. So, Uncle Mike, why don't you tell us how you're prepping? Because you're not going to be able on the show again until it happens on Monday. So, what's your strategy going into the big fruit company announcement here?
Bring back my back spread to me. Right now, between tonight and tomorrow, current position that I'm in, long Apple and also long the put that expires tomorrow at the 535 level. And all that is that it's just kind of a leftover as part of a spread. So just using that in case Apple decides to do some type of early announcement tomorrow before pre-market. I think that puts it like 7 cents, but if for some reason Apple's down $50 tomorrow, we're ready for it nonetheless. So I'll pay the 7 cents or whatever it was for the overnight protection. Reason that I'm doing that is that in case Apple does run up tomorrow and we have some type of a 10-point run up in Apple tomorrow, it'll be a more ideal spot to put on the hedge going into the earnings announcement. Now, I believe this is something that it's been a while since I've done this specific trade going into earnings, but I think the stars are aligned right, so to speak, for this to be justified. The plan for what I'm going to be looking at tomorrow, let's assume Apple's right at 555 or thereabouts. What I'm looking at right now is to probably buy a March 530 put option and then also buy a 560, 590 call spread or something along those lines to create a back spread-esque trade. I feel Apple's been kind of coiling lately, if that makes sense. Coiling for Apple over the course of the last month or so. It's been a little bit choppy, so I'm expecting a pretty decent-sized move at this earnings announcement. Last I looked, the front week straddle was at around 30 points. I haven't looked since earlier today, so that may or may not be true right now. But nonetheless, I want to go do that, but also go out to March or April. Still haven't made up my mind yet. Tomorrow's going to be the tail of the tape, so to speak. Something along those lines, so that way if it does get some type of a major vol crush or whatever, at least we'll be out a few months, and so we don't have to – I'm not going to do this I'm not going to be buying front week premium as a hedge against earnings. We're going to go a little bit further out, and then if Apple does become, as Mark would put it, a meh, then we'll manage the risk of the long premium with which we have, because then we'll have 2 to 3 months to sell some premium against it to make up for that large long premium position.
I'll tell you how you manage that long premium risk. You just sell a straddle, and then you sell some spreads, and you sell some put flies, and then some call flies, and then a couple of odd lots here or there, and then you put a fly on against it, and then you're good. You're done.
Oh, I need to get a trading room before I do that, though, don't I?
Yes, that is true. So we'll keep an eye on that. And you're right. Right now the ATM straddle here in Apple about $30. So expecting a bit of a move out here. Not exactly surprising, given what we've seen in Apple of late. So we'll keep an eye on that, and we'll all be thinking of you, Uncle Mike, when the big number is announced. All right, Mr. Andrew, what do you keep an eye on for the rest of this week and into next week?
We have the FOMC comes out. What is it, Wednesday? They have that Wednesday afternoon. We're going to taper. We're not going to taper. We like the conditions. We don't like the conditions, blah, 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 blah. I mean, the treasuries have made a pretty strong rally, and I'm curious to see if that can continue. Real simply, I think that's probably one of the bigger drivers right now. Earnings have been sort of so-so, and we're getting a pretty, I'd say the volatility, the realized volatility in the bond market is just batty. So I think we're going to see a lot more movement here. Don't know which direction it goes. If it all just kind of goes back to where it came from and we look at 3% again, if the Fed starts getting themselves out of the game. So that's really the biggest one. Individual earnings, unless there's something interesting, for the most part, we walk on by, do.
Uh-oh. Now you know you're holding down the option pit seat when you start singing. That's required for whoever is in the option pit cheer here on the show. All right. And last but not least, please tell me you're not going to break into song, Mr. Viceroy.
No, but I think other than the singing, Andrew had it spot on. 10-year at 278, I don't think anybody expected that. I think a month ago we would have bet 3.25 by now. The irony today was the big shift, and earnings next week. I don't know if any part of today was earnings jitters. It's I just have no sense of that. And Apple and Amazon next week will be kind of unique earnings events. So I don't know that they'll impact the market. It's kind of like Netflix yesterday. Huge relative strength today, but it wasn't really market related. I think what we start to see from the Fords, the telephones, the Pfizers, the Bristols, I think if we get no earnings jitters there, we get past this. And boy, if that 10-year stays under 3, we're off to the races again. I think the market then has got real legs to move a lot higher. But Argentinian default, Janet Yellen, new head of the Fed, Andrew's point, the FOMC meeting next week. I don't want to say the Fed will support the market because I know a lot of people talk about, we lived with the Bernanke put. But if we get a rotten market, I can't see the Fed dropping the taper. $75 billion now. I don't see them going to 65 or 55, especially after we've been down 2 out of 3 days this year. So looking at the 10-year, looking at earnings, I don't know if Argentina will be a non-event. I hope it's a non-event, but I think they're gonna default again, and that's what we're looking at.
Once again, I'm reminded why I like having you and Andrew on the show so much because it reminds me that I'm still young in my trading career because I don't refer to AT&T as telephone. So there we go. I love that. That's my favorite old school trading floor colloquialism. But unfortunately, that's all the time we have on the old program. But before we go, let me check in really quick with each of my cohorts, my partners in crime, to see what they have cooking in their respective necks of the woods. Uncle Mike, let's start with you. What's cooking on the old webinar train?
The chocolate and the peanut butter are finally meeting, Mark. On Thursday night, January 30th, we're going to have Cooper Sinclair from Jefferson National. He is going to discuss a fee-only annuity that he has to where he just paid $20 a month instead of the 2% mortality expense fees or whatever are in a lot of them. And I'm going to discuss how I use that product and hedge against it. So with that, it's going to be a unique environment in that we're going to talk about if you're trapped in an annuity because of tax issues and you want to do something more low cost. Jefferson National and a few others do have products like that. And I'm going to talk about how to combine options with such a product.
You diehard annuity lover, you. I knew it. I always knew you were in that camp.
Oh.
All right. And Mr. Andrew, what's cooking in the land of the pit?
Well, we have our bear market trading seminar tomorrow or Saturday morning. So again, go to optionpit.com/events or actually it's /events, I guess, and sign up. Hey, the market's down 1%. You might actually need to know what to do when the market's going south.
Yeah, check out the old Option Pit webinar explosion. They're sure doing a ton of them over there. They even managed to rope me into one of them, so by all means, surf on over to optionpit.com. Check out their upcoming webinar. Speaking of upcoming webinars and upcoming educational events, the boys at OX never rest, not when there's good edumacating to be done. So, Mr. Alex, what's cooking in the land of OX education?
Full webinar schedule. I'll just showcase a couple of them. Tuesday the 28th, Nina's going to do short calls. Thursday the 30th, intro to technical analysis. And also on the 30th, we're going to do a review of the new features on the site, including the walk limit product. That's a product that is very, very well received. But there's a full schedule. I mean, we do probably on average at least one webinar a day. Just come to the site, optionsexpress.com. You don't need a login to attend any of the educational events. Just click the education tab and everything is free.
All right. Thank you, Alex. And on behalf of Mr. Viceroy and Uncle Mike and, of course, the Lobster, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show and, of course, for writing in such great questions. Keep it up. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.